Democracy, we're told, is the fairest political system humanity has ever created. It's the people's voice. One person, one vote, the antidote to tyranny. But what if I told you that somewhere along the way, democracy stopped being just a political system and became something else entirely? A business model, not just metaphorically, but literally, with customers, marketing departments, quarterly revenue goals, and shareholders. Only the shareholders aren't you. They're the ones who've learned to monetize your choices, your fears, and even your ideals. And if democracy is a business, then someone's making a profit. And you're almost certainly not that someone. The idea of democracy as an ideal is ancient, but the reality of democracy as an industry is modern. In ancient Athens, democracy was rough, direct, and frankly, exclusive. Citizens, and by citizens we mean adult males with property, would gather in the assembly to debate and vote directly on laws. There were no campaign ads, no lobbyists in tailored suits, no political consultants running focus groups. But as societies grew, democracy had to adapt. It became representative rather than direct, and with that shift came a marketplace of influence. And, like any marketplace, those who could pay the most could dominate the shelves. By the 19th century, the machinery of elections, printing pamphlets, staging rallies, paying for newspaper endorsements, required money. But the real turning point came in the 20th century, when mass media and mass politics collided. The moment radio and television became tools for persuasion, democracy stopped being just about civic duty and started looking a lot like consumer marketing. In the United States, the watershed was the 1960 Kennedy-Nixon debates, the first presidential debates ever televised. For the first time, a candidate's appearance, charisma, and television presence could outweigh policy substance. Kennedy understood it. Nixon didn't. Those who listened on the radio thought Nixon had won. Those who watched on TV thought Kennedy crushed him. It was a lesson political strategists never forgot. In the new era, optics sold votes the way brands sold soap, and selling became the operative word. Campaign spending exploded. In 1960, the total cost of the U.S. presidential election was about $8 million. By 2020, it was more than $14 billion. And here's the thing, those billions weren't spent on some grand civic ritual. They were spent buying attention, manipulating perception, and selling a product. The product was a candidate, a party, or an ideology. The customers were voters. And the revenue stream? That came from the donors, the corporations, the interest groups, the actual shareholders in the business of democracy. Now, this isn't just an American story. Around the world, democracies have developed their own industries of persuasion. In the United Kingdom, the modern political campaign machine took shape in the Thatcher years, borrowing heavily from corporate marketing strategies. In India, the world's largest democracy, political parties now employ data analytics firms to segment the electorate into microgroups, tailoring promises and imagery to each one, exactly the way an e-commerce platform sells targeted ads. In Brazil, WhatsApp has become the front line of political influence, with campaigns treating group chats like private focus groups, seeding tailored messages for maximum viral spread. The tools change, but the business logic remains the same. If you want to win the market share of votes, you invest heavily in marketing, branding, and customer acquisition. And here's where the business model gets truly profitable. Because unlike a normal company, the people running political campaigns aren't just selling a product once. They're selling the same product over and over, every election cycle. Each campaign season becomes a revenue spike for political consultants, media companies, advertising agencies, pollsters, and now tech giants who control digital ad space. Think of it like the fashion industry. Every season there's a new line, a new slogan, a new policy emphasis, a new set of villains or saviors. But the underlying fabric doesn't change much. The business thrives on planned obsolescence. Today's promises are designed to be replaced, just as last year's wardrobe is designed to go out of style. Money is the lifeblood of this system. In theory, democracy should be a realm where the vote of a poor citizen counts the same as the vote of a billionaire. In practice, money buys the microphone. The financial system of politics is built to reward those who can fund the show. Lobbyists are the purest expression of this. They're the middlemen between the shareholders of democracy, corporations, trade associations, wealthy individuals, and the political actors who deliver returns on investment in the form of favorable laws, tax breaks, subsidies, and contracts. In the United States, lobbying is a $4 billion a year industry. That's more than the GDP of some small nations, all spent on influencing policy that affects hundreds of millions of people. And in many countries, the distinction between lobbying and outright bribery is little more than a legal fiction. The language of commerce has fully infiltrated political discourse. Parties talk about branding and messaging with the same intensity as consumer goods companies. Politicians think about market share in terms of voter demographics. Campaign teams monitor conversion rates, how many undecided voters their ads convert into supporters. Even policy itself gets focus tested, not just for feasibility, but for market appeal. Should you push healthcare reform this year or next? The answer doesn't just depend on need, it depends on the polling data. The will of the people in practice is a curated product. This transformation has profound consequences for the financial system, because when democracy becomes a business, economic policy starts serving its investors. If your largest campaign contributors come from the banking sector, you're less likely to support aggressive financial regulation. If your donors are energy companies, climate policy will mysteriously stall. The public might think these are ideological battles. But in the boardroom of democracy, they're investment decisions. And in the long term, this shifts the entire balance of money and power away from the citizenry and toward those who can pay to play. The irony is that democracy's business model has made it far more resilient in some ways and far more fragile in others. Resilient, because as long as the business is profitable, the machinery keeps running. Elections happen on schedule. Campaigns are funded. Media coverage flows. Fragile, because profitability doesn't require public trust. A cynical, disillusioned voter base can be just as lucrative, perhaps more so, if it responds strongly to outrage marketing. Division and fear are fantastic engagement drivers. Political advertising is one of the few industries where negative campaigning often works better than positive. Anger sells, scandal sells. Outrage is a renewable resource. This dynamic is amplified by the rise of big tech. In the 20th century, political marketing was broadcast. You sent one message to millions. In the 21st, it's micro-targeted. You send millions of tailored messages to individuals, each calibrated to their fears, hopes, and biases. Social media companies don't just host political ads, they are the infrastructure of modern democratic marketing. And because their revenue depends on engagement, the most profitable political content is often the most polarizing. In effect, the business model of democracy has merged with the business model of the attention economy. Both thrive on keeping you emotionally hooked, constantly checking, constantly reacting. The global crisis of trust in democracy isn't happening in a vacuum. It's the predictable outcome of decades of treating politics as a profit center. Once you see it in financial terms, the parallels to corporate monopolies become obvious. Incumbent politicians enjoy brand recognition, marketing budgets, and customer loyalty programs. In politics, those are government resources and networks of influence. Startups, in the form of new political movements, face massive barriers to entry. And when a disruptive new player does break through, the established powers either crush it, co-opt it, or buy it out, not unlike how big corporations respond to innovative competitors. The final irony is that the shareholders of democracy, the donors, corporations, and power brokers, don't actually need a functioning democracy to maintain their wealth. They need a functioning system that looks enough like democracy to keep the customers participating. If voter turnout drops, if public faith erodes, the marketing just changes. The product is rebranded. Democracy becomes modernized, streamlined, more efficient. Phrases that can mean anything from voting apps to reduced oversight to laws that make it harder to challenge incumbents. As long as the business model keeps delivering returns to its investors, the system endures, regardless of whether it fulfills its original promise. And here's why this matters for you. If democracy is an industry, you are both the consumer and the raw material. Your attention, your data, your vote, these are the inputs that fuel the machine. The most dangerous thing you can do in a market like this is assume that your role is purely passive. In any business, customers who understand the game tend to get better deals than those who don't. The same applies here. Financial education doesn't just mean learning how to budget or invest. It means understanding the larger financial systems that shape your choices, including the political ones. It means recognizing that your vote is not just a civic duty, but also a transaction, and making sure you extract maximum value from it. History teaches us that when the business model of governance becomes too divorced from the needs of the governed, systems break. Sometimes slowly, through creeping apathy and declining participation. Sometimes violently, through revolutions that reset the market entirely. From the fall of the Roman Republic to the collapse of Weimar Germany, the pattern repeats. When political systems prioritize the profitability of power over the service of people, the bill eventually comes due. And when it does, the cost is rarely paid by the shareholders. It's paid by the customers. That's why you should see every election, every major policy decision, every sudden shift in public messaging as part of a larger market cycle. Ask yourself, who's investing in this outcome? Who stands to gain financially? What's the return on investment for the people funding this message? And if the answers disturb you, don't turn away. Engage strategically. Diversify your information sources. Support transparency measures. Push for campaign finance reform. Because just like in any market, the only thing worse than playing the game is not realizing you're in one. So the next time someone tells you democracy is in crisis, remember, the real question isn't whether democracy is working. It's whether the business of democracy is still profitable for its shareholders. And the answer to that question will tell you far more about the future of your freedoms than any campaign slogan ever will. If this gave you a new perspective, hit subscribe. History has the answers. I'll show you where to look.